What is going on, everybody? Hopefully you guys are doing well out there. Time for another Sports Card Show podcast, in this case also on YouTube as well. Want to thank the fine sponsors over at manscaped.com. Head on over to manscaped.com. Enter the promo code SCR to save 20% on their wildly popular and high quality trimmer for men. And your balls will thank you if you do that. You'll also get free shipping as well. I've been playing around with this. I haven't been playing with my balls, but I've been playing around with the Manscaped for a few weeks now. And boy, it is very, very nice to stay trimmed up and not worry about getting nicked and cut while you're doing it. I know some friends that have purchased the product, and I think you should as well. That's manscaped.com, promo code SCR. Let's jump right into the one topic. Yes, we have one topic on today's show outside of thanking our sponsor at Manscaped, and that is Topps is going to be a public company again, and this time through a SPAC, S-P-A-C deal, as the baseball card community starts to venture into NFTs. We'll have more on NFTs here in a second, but let's talk about somewhat of the mechanics of the deal. We'll talk about a little bit of the valuation. We'll kind of jump into the weeds on that. And then what I want to do is talk about maybe the potential impact it does have on the hobby, the distribution. You know, what is Topps now going to have to do now that they're a public company that they might have been doing differently when they were a privately held company? So we'll talk about that. We'll also talk maybe potential impacts on Panini and Upper Deck, the two other major card manufacturers out there as well. Are they feeling the heat? Do they want to go public too? We'll talk about that potentially in the future. Now, Topps, this deal was valued at $1.3 billion. For those of you that weren't around a long time ago, Topps actually sold a long time ago, around 2007, it wasn't that long ago, but it was right when actually Sports Card Radio was being born, is right when Topps was sold to Michael Eisner and a group of, private equity group at Madison Dearborn Partner. The deal was valued at $385 million, and it was about one-time sales. The company had about $300 million worth of sales in 2006. The company had about $80 or $90 million in cash. So the deal basically valued Topps at about one-time sales, slightly over one-time sales. Now, you'd be interesting, where does $1.3 billion land on the valuation spectrum? And that actually values Topps at about 2.2 times sales, since they had about $567 million in sales over the last year in 2020. So 2.2 times sales. Some people are saying, oh, that's not that big of a deal. Well, take a look. Amazon's trading at 4 times sales. Yes, Amazon, one of the largest companies in the world, not just a retailer, but cloud computer, all this. They got a lot of stuff going on in Amazon. They traded 4 times sales. Funko, the maker of, pop, those popular Funko Pop kind of like just bobblehead kind of things, they trade at 1.17 times sales. And Mattel, maker of just numerous different popular brands of toys and have just massive distribution, well, they traded at 1.57 times sales. And we actually seen that has gone up over the last year or so. Those brands, just like most things in the market, have actually been increasing. Funko was trading at about 0.2 times sales about this time last year. So in my opinion, very, very rich valuation in terms of Topps. Again, considering that they sold in 2007 for about one-time sales, including cash, that is at a very high valuation, in my opinion. Now, you might be wondering, what kind of sales does Topps do? And let's blow up this. I want to show you a couple things. This is just some investor slides that they had. I want to show you this first. Like, what's going to happen when Topps, has this overwhelming kind of obligation to deliver for shareholders? What are they going to do? Here's our growth accelerator. So they're going to have to keep growing this company. They can't just keep it stagnant. And we see here their plan is to get licenses. Okay, this is their bread and butter businesses. They get licensed, they make cards, and they make stuff. And they think Euro 2024 and Euro 2028 is going to be big for them. I'd have to agree with that. They also announce esports here, and then they have new partners. Just kind of generally throwing this out there. I don't know what they necessarily mean by that, but definitely probably a small opportunity in esports, and certainly Euro as well, Euro soccer as well. Now, they talk about their channel and the geography. They have this digital expansion into blockchain and NFTs. NFT, everybody's just trying to attach blockchain and NFT to their stock because they think it's going to go up. We'll talk about if that's a good idea or if these NFTs are really going to stay as hot as they potentially are right now. Now, they also talk about e-commerce growth, which I definitely think they can do more of, more direct-to-consumer, things of that nature. And they talk about international expansion, another thing that I think Topps and all these card companies could be doing better. I get emails all the time, people wanting to get these products in other countries, and they simply can't because they are made here, and it's difficult to export these products. Also, the licensing, the licensors like the NBA, the MLB, sometimes those licenses are only for a certain territory, and so they're going to have to go back to the licensor to see if they can sell those products in other markets. Now, they have some adjacencies over here. Student athletes. I thought this was probably the most important one on here. Obviously, we've got a movement to pay, college athletes. I think it's only a matter of time before that ends up happening, and student athletes would be a gigantic market for this because you could start making cards before these guys and girls potentially even go pro. And you also have sports betting, which I thought was interesting here. Not exactly sure how Topps could tie into sports betting, but they threw it on here and it might look good to investors. Now, here's some simple new license math. I see a lot of people talk about, oh, Topps makes all this money. Well, here's an example. They show you right here. This is a very good example. So a new license. So if they get a new license, they expect the revenue between 100 million and 150 million, depending on the license. Obviously, maybe something like baseball might be higher. Maybe something like esports or something will be a little bit lower there. But they have product cost at about 45 million, or about 45% of the revenue. So they run at about, a 55% gross margin, but then you have to pay the licensor 30%. You see $100 million here, and we paid the licensor 30. They take 30% right off the top, not the profits. They take it right off the top. So on revenue of 100 million, just the product cost and the licensing cost 75 million. They're going to throw another 5 million at marketing, and they're going to end up with $20 million. And then this is gross. Okay. This is likely not including salaries, not including overhead, things of that nature. I would guess their bottom line margins are probably in the low teens. This is a 20% margin, but I would imagine that being a gross margin there. So on $100 million worth of revenue, Topps is, only seeing about 20 million of that after kind of producing the product. I thought that was kind of interesting to actually see that. Now, from a valuation perspective, we'll talk about this a little bit more, but what I noticed here is they threw up some other like public companies. You got Collectors Universe, which just went private, actually. You got Hasbro on here, you got Mattel, you got Funko, you got a couple other brands. What I noticed, and then the Topps breaks themselves out over here, Topps is basically at or below all these other companies, okay? And so from a valuation perspective, they're right in line with a lot of this, but a lot of these other companies, in my opinion, have much better distribution. Think about Mattel, Funko, Hasbro. I mean, these items are found everywhere and they're actually easy to get, which I actually think makes it for a better business. Whereas Topps, Target's kind of basically started to kick cards to the, behind the counter, if not out altogether. Walmart has kind of seen that similar thing. And then you've got companies like Collectors Universe, which run at a much higher margin because they don't have licensing cost, okay? Their cost is basically human capital, which they've had trouble fulfilling recently since they've stopped taking new submissions. But, it's kind of interesting that they compare themselves to these other brands. In my opinion, probably Mattel, Funko, and Hasbro have better distribution than Topps, have more product lines, have obviously more revenue. And for Topps to be in the same ballpark in terms of valuation in there, I'm not exactly sure if that is a fair fight for them. Now, coming into the financials, we won't dig too deep into the weeds on this, but those of you that are interested in this, we'll take a look at this. We've got our physical sports and entertainment cards. These are the cards. Take a look. In 2019, we had 219 million. Well, it bumped up 23% in 2020. 2020 was just a great year for a lot of businesses. Okay, it was a bad year for restaurants and things like that, but for companies like Topps and anybody that wasn't in kind of the travel and leisure space and hospitality, Well, it was a great year, and they saw 23% growth in their physical sports. Now, they saw growth across the board, except for confections, which is their candy business. You see, in 2019, the candy business was actually still larger than the card business, and in 2020, it really flip-flopped. The cards and the digital projects really was much bigger than the candy. Now, they're seeing kind of a return to normalcy back in 2021, but cards is still a much bigger market. Now, they're anticipating 22% revenue growth over the next year. That is pretty aggressive in my opinion. After coming off 23% revenue growth in 2020, they're projecting 22% growth in 2021 to fall back to 12% growth in 2022. So investors might have to digest that as well. We get our percentage of margin down here. Again, like I said, on the gross basis, they're grossing out 20% on a new license. But after you factor in all the other stuff that they have going on, it's probably kind of a mid-teens valuation on terms of margin. Now, in terms of the net income, what is flowing to the bottom line? Take a look in 2019. Net income was $8.8 million. Okay, I showed you that they had $460 million worth of revenue in 2019. Well, only $8.8 million of that flowed to the bottom line. And again, this is a company that just sold for $1.3 billion. Okay, I know there's some adjusted numbers, and some of you dorks out there might say, well, look at the adjusted number. They made $51 million. Okay, I have never met a company that never had to pay interest on their loan, which is here, $13 million. I've never met a company that didn't have to pay income taxes if they owed them. That's $5 million. Depreciation and amortization. This is not a cash charge, so if you want to add this back in, go ahead, but it is, from a tax basis, something that you have to factor in. You got transaction costs, got sponsor management fees and expenses. Imagine if Topps didn't pay that. Okay, so this adjusted number, just erase this. On almost any company, you can just erase this adjusted EBITDA number. It's what they want you to look at. It doesn't mean anything, in my opinion, for the most part. Maybe some special examples here, but in this case, it doesn't, because other than depreciation and amortization, these are numbers that you want to factor in. Now, net income for 2020 was much larger. Okay, we see here we made $567 million total revenue, and profit went way up. I think primarily because we shifted away from confections, which is kind of a low, probably even lower margin than the cards are, and we shifted to more products up there, more sales up there, and boom, $83 million. That's actually pretty nice for 2020. You see here, though, for 2021, they are projecting 22% revenue growth from 567 up to 692. But guess what? Profit's actually going to go down. You might ask, why is profit going down? And we have our answer. Over at Moody's, they talked about how Project 2020 was contributed to a lot of strong, margins and strong profits and revenues for Topps in 2020. And they feared that in 2021, earnings were going to go down because Project 2020 was such a huge success. A lot of you guys went out and bought those cards and bought a bunch of them. And a lot of them are not worth nearly what you paid for them, but such is life in the baseball card world. So we'll see what happens with this one, but Topps revenue is expected, or their profits are expected to drop in the future years because of these types of things. And it's also a fickle nature. They also talk about that in Moody's, how it's kind of a hot and cold market. And this is a company which we just showed you let's see what the revenue was. Okay, they had $567 million worth of revenue in 2020, 2019, 460. What I want to show you is that back in 2000, 21 years ago, Topps had $439 million worth of revenue. So again, not very far off the revenue numbers that they've just posted recently. In fact, it was almost exactly what they posted in 2019. Now, they had a Pokemon contract, and that led to a lot of sales for Topps, but it just shows you these licenses, they come, these licenses, and they can go, and it can, increase your sales. But if those licenses go out the door, like it has with Topps, with the NFL and the NBA and things like that, in the NHL, well, then your revenue can drop or it can go stagnant. So this is a company 21 years ago was basically had the same amount of sales, give or take, 20, 30, 40%. as they do today. Okay. And does that make it an attractive investment? My opinion, probably not. Now, some of you might want to go and buy this SPAC that agreed to buy Topps. You can go on there. You can buy this company. You can buy them when the ticker symbol changes to TOPP. Here's my thoughts. I'm not going to give investment advice on here, but here's my thoughts on that. If you don't have a full portfolio of Amazon, Apple, Google, Microsoft, Facebook, Costco, Bank of America, Visa, MasterCard, on and on and on, JP Morgan. If you don't have a full portfolio of either those individual stocks like that, blue chip, high value stocks, or the equivalent in like an ETF, you got a healthcare ETF, you've got a banking ETF, you got an energy ETF, you got an S&P 500 ETF, you've got a NASDAQ ETF. You don't have a full portfolio of blue chip stocks, you have no business going and investing in Topps, in my opinion. You might as well just buy the baseball cards and have fun doing that. Now, speaking of NFTs, speaking of investments, the buyer of the 69, so some dude bought Beeple, who's like an artist, made some digital art, and he sold it for $69 million. And that was all the rage a few weeks ago. Well, the buyer of that, I thought it was interesting. He says, this is the guy that spent $69 million on an NFT. Here's what he has to say about him. I don't think NFTs will hold the same kind of hype forever around high value items. The market will get divided. There'll be very few high value items and an infinite number of very low value items. And they talk about here on the marketplaces for NFTs, the value has actually fallen over the last few weeks as people kind of rushed into this space. What does it sound like? Sounds a lot like trading cards. The vast majority, there's an infinite number of very low dollar trading cards, $1, $2, $3, baseball, football, basketball cards. And there's a very, very, very small few cards that are actually regularly traded at high values. And I'm talking maybe north of $100, let alone thousands, tens of thousands. And certainly we get into the hundreds of thousands, even millions of dollars. You can count on maybe one hand, maybe two hands, the number of cards that sell regularly in the six-figure range. And so I think quite frankly, I think NFTs is mainly hype. I think there's a lot of benefit around them, but for the most part, I think it's mainly hype. Now, what the heck is Panini going to do? Panini has wanted to try to sell their business. They've tried to resell their business, the Panini America business, the entire business. They seem to try to do it every time a World Cup comes around. Wouldn't surprise me if they are shopping their business as well. Could they go public via a SPAC or something like that? It's probably a little more complicated with Panini, considering they have ownership in other countries like Italy and other parts of Europe as well. It's probably a little bit harder to divide this company up. Could Panini America get spun out and they could sell, or they could, be bought out? Who knows? Maybe Topps could consolidate the industry now that they have backing of investors. Well, maybe they could consolidate the industry. Maybe they could make a bid for something like Upper Deck and get athletes like Michael Jordan and Connor McDavid, LeBron James, Tiger Woods, my boy. Hopefully he's feeling well out there. So we'll see what happens. That could potentially be a fallout from Topps getting investor money backing, because if you know this, Topps has actually been owned by private equity, which really is intentioned is to kind of squeeze money out of a company. Whereas if you have the right investors backing you and you have the right messaging from management and things like that, well, Topps could be kind of in growth mode and could kind of get investors behind the idea that they could consolidate the industry a little bit. And maybe we could see something like that happen where Topps could actually go out and be the acquirer. Now, it is all going to hinge on demand for the Topps shares. If the Topps not really IPO, but once the SPAC deal closes and Topps is officially rolled up into this new ticker, well, what will be the demand for shares at that time? If they're low, there's no demand for the shares. Well, it's going to be hard for them to raise additional capital, because one way you can raise additional capital is just issue more shares of your company, which companies like Tesla and all these companies pretty much do all the time. And so we'll see if Topps is able to do that. And this is why I think they had Michael Eisner going on CNBC, and you know, heads of the company are going to be talking about the next hot thing. Does Topps make any money right now from NFTs? The answer is no. And so it was, you know, kind of interesting that they had a representative of the company out on these financial networks talking about a product that they make $0 from. They didn't even really, you know, it's like they have a product that is hot right now in baseball cards, and they pranced Michael Eisner out talking about NFTs. So I thought that was interesting. I think it shows you that this company is going to have to kind of go on to that next hot thing. It's just like trading cards. We're always on to the next hot rookie or the next hot set or the next hot sport or whatever it is. And Topps is going to have to kind of get into that mode as well. Now, so we'll see what happens with this one. I think the valuation way super rich. And here's what I want to show. Here's the last point I want to make to you. So the last time Topps sold, or excuse me, the last time Topps' sales peaked for the very first time in 2000. Okay, 2000, they had this gigantic, you know, $439 million worth of sales. And sales fell off a cliff the year later when they fell 155 million when the Pokemon license basically went out the door. Now, what happened in 2000? Shortly after 2000, the stock market crashed. Okay, so that is a bad thing. So Topps' sales peaked and the stock market crashed. Then Topps sold in 2007. If you get what I'm saying here. What happened right after 2007? Well, in 2008, we had the next stock market crash, the next financial crisis in 2007. So Topps got all the way back, sold their company at a really big valuation, pretty big valuation, and the stock market crashed. Well, guess what happened yesterday? Topps sold at an even higher valuation, 2.2 times sales, which is bigger than Mattel, bigger than Funko, bigger than most of these other brands that are in this licensing game. Well, I'd be lying if I didn't think about putting some stop losses under my stock portfolio, because every single time Topps' sales have peaked and or they have sold the company, we were at the top of a market. And when we start talking about digital art selling for 69 million, Bitcoin's at 60,000, baseball cards are selling for $1 million. Everybody thinks that, you know, people are waiting outside of Targets for Prism basketball cards and all this other stuff. Well, and look, a box of Prism, $1,000 right here. Okay, you can come here and buy this at $1,000 if you want. No, this is Origin. This is not even Prism. This is Origin. It's like a knockoff of a Topps brand. It just makes me think we're not in a new age. We're in an age where things could potentially go the other way, because $1.3 billion for a baseball card company, 2.2 times sales. I don't know. Again, we had most people had a fantastic 2020. That is because the government passed out a bunch of free money. But on top of that, I think even more important than that, look, none of us have taken a vacation. We haven't had to do a rental car. We haven't had to book a hotel, haven't had to book a flight or a cruise. We haven't been able to go to movies. We haven't been able to go to baseball games. We haven't been able to do a lot of things. So what happens when all that stuff comes back? Will that cut into Topps' revenues? Will it cut into Panini's? Will it cut into Upper Decks? Although Upper Decks kind of a smaller player in this as well. So hopefully you guys enjoyed this show. A little bit different. We talked about Topps going public again. Theoretically, they'll be on a conference call every 3 months, so we'll keep you abreast on what happens. This deal, I believe, is expected to close, I think, either Q2 or Q3, maybe even Q3, Q4, but it'll take a couple months before this type of deal closes. I think the owners of the SPAC shares have the option to kind of, turn this deal down. My guess is they won't. But we'll see what happens with this one. Hopefully you guys are doing well out there. Don't forget to check out manscaped.com. Check out their product. You save 20% plus get free shipping with the promo code SCR. They have this cool little light on this thing. This thing works. I mean, look, you guys know here on the Sports Card Show podcast, we've turned down record number of sponsored deals on this show, including people in the sports card space. We only partner with brands like this that create quality products and deliver it to you at a quality value. If you use the promo code SCR, you'll get even more value than that. Hopefully you guys enjoyed this video. We'll be back again soon.